Hi, everybody. My name is Mark Oliver, and I'm a financial coach at Metropolitan Family Service in the Economic Empowerment Programs. I'm here today recording a video in September of 2020 because it's tax time. Um, Not tax time in the sense that you need to rush off and file your tax returns right now, but in the sense that we're 3/4 of the way through the 2020 tax year, which makes it a really good time to do a check-in on your tax situation and see if there's anything you can do to maximize your tax benefits, adjust your withholdings, or take any kind of action that benefits you as an individual taxpayer when it does come time to file next year. In order to do this, I'm going to use some online tools from the IRS and the Oregon Department of Revenue that are typically are released in September of each year. Um, they're called tax withholding estimators or calculators. These are tools that I use and have used with clients in like one-on-one coaching situations, and they can be really useful for finding out where you stand currently, and for even educating yourself about things like tax credits and increasing potentially your take-home pay each payday, or maybe maximizing your tax refund next year, that type of thing. The word withholding just means the portion of your wages that have been taken out of your paychecks to cover your tax debt for the year. Typically, that's done by your employer, and you tell them how much you want to take out in a Form W-4, and then they send that money to both the state and to the IRS, where it's applied to your tax account. If you owe more than has been withheld, then you're going to have to pay that difference in the spring of the following year. But if what you owe ends up being less than what was taken out, then you get a refund. That's the simple version of that. In order to show you how to do this, I've made two fictional case studies to show you how to use these tools, and I really hope you find this useful. Fictional case studies coming up in just a moment. These are both for AmeriCorps members who are serving, well, fictional AmeriCorps members who are serving at Metropolitan Family Service in a fictional universe. And I'll show you what I have here. Basically, I've made some fake pay stubs, earning statements, just to help me fill out the form as we go, because that's exactly what you would need to do this. You'd need your most recent pay stubs from any jobs that you've held this year, including jobs that are already finished with. So case number one, for example, this is Pat, who's starting a first term of AmeriCorps service in September of 2020. And Pat is a 27-year-old single parent of 2 children, ages 3 and 5, who has worked 2 jobs this year, one of which was in food service, went from January 1st to the present. Pat graduated from a 4-year degree program in the spring, was working part-time, and kept that part-time job through the end of August, actually. They just quit, and their plan now is to live solely off their living stipend for the rest of the year, the AmeriCorps living stipend, which started, in this case, in September 1st. They have been living with family and are living with family, but they can't be claimed as a dependent by anyone else. And one of Pat's family members is providing free childcare for their 2 children. So the 2 pay stubs I generated just using an online tool called paystubcreator.net. Not really sure what it's for, but it makes good fake pay stubs. The first job was, here's the food service gig at Vegan Pizza Pit, which was open all year. There was no pandemic in this fictional universe. And then we have the second pay stub from Metropolitan Family Service. I'm going to go in and switch over to the IRS tax withholding estimator and fill out some of these forms and show you some of the potential of this tool. Let's see, Pat was single, not being claimed as a dependent, probably is going to claim their own dependents, 2 children, and did have at least 1 job this year from which federal income tax was withheld. The total number of jobs was 2 for the year. No pension income. This other situation, these are just various possibilities for additional income, like self-employment or unemployment compensation, scholarships. None of these apply in this fictional case. So that finishes tab number 1. Now we go to income and withholdings, and this is what we need the pay stubs for. First job, I'm going to call the first job the AmeriCorps service. Do not expect to hold this job for the entire year. But from, I believe I said September 1st through December 31st, in this case. Paid twice monthly. Most recent pay period ended on September 15th. And the total wages expected to receive this year is based on the living allowance, 3 months of living allowance from September through December. I calculated that it would be $4,090.91. No bonuses to report. Now here we go. We need to look at the pay stub. Federal taxes withheld year to date from this job. Now they just started at the beginning of September, and the amount withheld is just from a single paycheck. That was $10.83. And per pay period, this is the same answer, $10.83. Pat was not contributing to a tax-deferred retirement plan or an HSA, FSA, anything like that. So job 1 is finished. Now we go to second job, which was the food service gig. And this job was not for the whole year. Held the job from January 1st until August 31st. And total wages earned, we actually know that definite figure. The gross income we're looking for here, and it was $20,706. No bonuses. Full amount of taxes withheld was $1,219.65. No retirement plan, no HSA. And that's it for the jobs. Now we get into some more fine-tuning here. The first section includes adjustments to income. The truth is, they say here, most taxpayers don't have a large enough adjustment to have a significant income impact on their tax obligation. But let's say you don't even know what an adjustment is. You can click over here on this question mark, and a tooltip will pop up saying, explaining it, and then saying what you can do to learn more about it. So if we say see adjustments, in this case, we can look and see what those are. And here we have a list of those. Contributions to an IRA, outside of payroll deductions, student loan interest deductions, alimony paid, all sorts of things. Now, Pat did just graduate, but they would still be in their grace period for the student loan, so there's probably no interest on student loans to consider. So let's just skip. None of these actually apply, but it's a good way to learn about these things. Even like, let's say you have questions about the student loan interest deduction, you can hit this And it says student loan interest is interest you pay during the year on a qualified student loan. Includes required and voluntarily prepaid interest payments. You can deduct the lesser of $2,500 or the amount of interest you actually paid during the year, whichever one is less. For more details, you can actually click here and get to an IRS topic release that explains it in full, like the whole aspect of the tax code if you're that into it. But in this case, it's totally irrelevant. It's just this is one of the cooler parts of this tool that I think are fairly educational. You can learn about all these things, but none of them apply in this case. So we'll go to the next screen and look at deductions. Now, as an individual taxpayer, this Pat qualifies for a standard deduction of $12,400 and wants to learn more about deductions, so clicks on the tooltip and it kind of runs you through what a standard deduction is. It depends on your filing status and dependency status and age and whether or not you're blind. If you want to learn more, there's a tax topic about that too. I'm pretty sure in Pat's case that the standard deduction would be the higher amount, which would indicate that that's the one to pick. So we're going to click there. And then move over to tax credits. Now, tax credits are subtract directly from your tax obligation. So these are good things. And low-income individuals typically are going to qualify for a tax credit that's called the Earned Income Tax Credit. Let's look at them. I think these, and there's also a child care tax credit, so that might be relevant in this case. So let's take a quick look here. Sure enough, child and dependent related. Now it says you stated you have 2 dependents. If this is incorrect, you can go back and fix that. But child tax credit, number of qualifying children under age 17 was 2. Number of qualifying persons in this case would be 2 for the child dependent care. Estimate of your work-related child and dependent care expenses. This was a family member providing the child care and not being compensated monetarily, so we don't have to put anything in there. It's 0. But the EITC, number of qualifying children for the EITC, Earned Income Tax Credit. Let's take a look at that. EITC is a benefit for all working people with low to moderate income. To qualify, you have to meet certain requirements and file a tax return, even if you do not owe tax or are not required to file. Now that basically means that if your income is low enough that you're not required to file, then you don't have to, but you're never going to get this tax credit. And it'll make a big difference, especially for a lower income person like Pat, who has children. The only way they can claim this is by filing. So I think we're going to include this with 2 children, 2 qualifying children. No adoption tax credit. The rest of these, I'm pretty sure none of them apply in this test case, but not paying taxes in a foreign country, not a homeowner, et cetera, et cetera. So we'll move on past there. And we got our results. In this case, it looks like Pat is likely to get a refund, is projected to overpay their tax with withholdings by $1,308. So that would be a refund that's coming back to them next year after they file their taxes. Now, we can look at some of the details here. Let's say that Pat is kind of struggling with the AmeriCorps living allowance, might want to have less withheld out of their check just going forward because they need every penny. You could adjust this down. You could make the refund smaller by making withholding smaller. So let's say we're just taking out $750. And then it'll tell you how to make that adjustment here, this is actually pretty cool too. You can generate a Form W-4 using this tool. So you can, and it tells you how to fill it out. You can either do it in paper or use this online tool, which I'm going to go ahead and do in a different tab. And we'll get, oops. I'm not sure what this is. Let me try that again. Take two. Let's try it. Okay, yeah, so you don't want to do that in a different tab because it's a download. So I will, it downloaded it, and there's basically a pre-filled W-4 that's generated by this tool. And all you would have to do is turn that into your HR department. You'd have to fill in your name. Well, I guess it's not pre-filled, so you'd actually have to take the information that it tells you. Okay, so blank W-4. Last year it was pre-filled. And you would just follow these steps, like select single. In this case, fill it in line 1C, enter $0 for credits and other reductions to annual withholding. All of these things. Now, down below here, it kind of tells you what some of the things you entered were, but also some of the calculations. So you can take a look at how much you're getting in tax credit. And in this case, I'm curious about that. This person had 2 qualifying children. They get a child tax credit of $4,000 and an earned income tax credit of $4,769. That means all of this money comes to them. It's a refundable tax credit that basically accounts for the fact that Pat is getting a refund. They didn't pay enough in taxes in order to get a refund, but this tax credit is coming back to them because they're low income and they have 2 qualifying children. So filing taxes would be a great idea here. Otherwise, they're probably going to have to pay taxes. So this is the first case study. I'm going to go back and start it over for the second one and show you the second case study. This is a person named Jerry who is starting a second term of AmeriCorps service at MFS in September of 2020. Jerry's 23 years old and in a single-person household. They completed the first AC AmeriCorps service term in August, and they're starting a second term in September. Earlier this year, they used a $5,000 lump sum out of their Siegel Education Award to make a number of PSLF, public service loan forgiveness qualifying payments on their student loans as soon as they could get their hands on the award. So $5,000, that'll count as additional income in this case. They also have been supplementing their income from their living stipend with DoorDash gigs ever since July. No one's claiming them as a dependent because that's complicated. Now, the mail has arrived, so you'll hear a hound barking in the ground floor down there. So the thing about DoorDash is it doesn't send pay stubs because it's contractor work. So there's no tax withholding possibilities there. So all of that money is earned income that still has to be taxed. So you can't get a pay stub, but what you can do is go into the app and look and see how much money you've made for the year. Jerry averaged $183.42 a week since July 1st. And they're going to continue doing DoorDash at a similar level, similar rate throughout the end of the year. Early next year, they're going to receive a 1099 form that reports the total they've earned from this contracting job. Since they've had some weeks, it's very variable income. Some weeks they've made $500 and others when they've only made closer to $20. It's pretty variable, so they're averaging this out as a weekly number. taking the total earned for the year, dividing it by the number of weeks, and then averaging it. They also have MFS Pay Stubs. So we have the most recent one here, again, fictional. And then we have, let's see, the DoorDash number was 183. We don't have a pay stub for that. What is this? Oh, the $5,000 in other income from the Siegel Award, which we don't have any forms for, but we know it exists, so we'll count that money too. So there's 3 different sources of income here. Now into the estimator. Let's see, it was Jerry single, yes, filing single. Not a dependent, has no dependents in this case. Has held a job this year with withholdings. How many jobs do you expect to hold this year? Now in this case, even though DoorDash is generating income, we're not counting it as a job because this is only for jobs where federal income tax has been withheld. So we just have the one, which is AmeriCorps service. No pension income. None of these apply, I don't believe. Oh wait, yes it does. Earned income from other sources, that would be the Siegel Award and the contractor stuff. Okay. Not blind, not older than 65. Job, do you expect to hold this job for the entire year? Yes, in this case. How frequently are you paid? Twice monthly for AmeriCorps. Most recent pay period ended on, let me double check, September 15th. Total amount of wages expected to receive this year, I believe the living allowance is $15,000 even for a full year for 11-month term. And no bonuses. Okay, using your last pay statement, enter the federal income taxes withheld for year to date. And that is federal taxes $859.86. Each pay period, it amounts to $47.77. No retirement plan, no HSA. Other sources of income and tax payment. Total amount of any other earned income. So we have the $5,000 for the Siegel Award. Also, we have $183 a month, which I didn't calculate in advance. Let me just do that really quickly. For 6 months, 183 times 6. This is for the DoorDash. Or no, I'm sorry, that was weekly. 183 times 26, number of weeks, 4,758. So $9,758. $8. 5,000 for the Siegel Award, 4,758 for DoorDash. Adjustments to income, let's look at those and see if anything applies. They probably do have a student loan, but let's pretend they don't. Okay, no adjustments. Deductions. Take the standard deduction here. Now, tax credits we do want to take a look at because this is another low-income individual. Nothing child and dependent related. And in this case, Jerry is 23 years old, so is too young to qualify for the earned income tax credit. You have to be 25 in order to claim that. So, not an option in this case. But none of these other things apply either. So, let's go into the next screen. This looks like no refund projected based on everything we've entered this year. So this person is not going to get a refund, and they're going to have to pay, although it's only $29, so it's a $29 payment. But let's say that Jerry wants to avoid owing the IRS next year. I think that's a good, it would rather have a lump sum refund. Let's change that. So let's say even like $150, $200 would be a good refund. In this case, let's look at the instructions for how to adjust withholding. What would have to happen is filling out a new W-4 with your employer. And I believe you can do that in Paycom, actually. You don't need to print out a form and give it to HR. You can just do it using Paycom. But you would select single filing status on this line, and then you can have additional money withheld from paycheck, $75, that would pay the underpayment of taxes that was projected. Sorry. And would result in a refund of approximately $200. And you would want to do this as soon as possible in order to make this effective in the current pay period. But that's the way to do it. Or let's say that taking $75 out of each pay stub between now and the end of the year is too hard. Maybe you could lower that to $100. In this case, you'd want to have an additional $70 withheld. $50, you'd have $61 withheld. So, or you could just write a check for $29 when the time comes. So, there's that, and that's the kind of thing you can do with this. Now, other things you could do, let's say, with enough disposable income is that you could, open a retirement account. You could open an Oregon retirement savings plan account, start making deposits towards retirement, in which case you'd be able to qualify for for certain adjustments and tax credits that relate to savings. That might be another way to change so you could go back in here and let's say, take a look at your retirement savings option in the tax credits. And let's say if you were to put in between now and the end of the year, $500, assuming you have that in disposable income in your savings account, obviously, make that change. Then you get a tax credit for the retirement savings. And you're going to get a refund of $471, which would basically be about the same as the amount you're depositing in your retirement savings. So that's interesting. If you're happy with these results, you can make changes and just immediately go open an Oregon retirement savings plan. Probably want to talk to a financial planner if you're thinking about something like that, but that's one way to reduce your burden. So you can go and just kind of change these. This is a fictional scenario, but apply your own scenario as well and try this and see what it tells you. And of course, if you want any help with this, please reach out to our program manager, Lauren Fontana Rosa, and tell her that you'd like to work with a coach on this. And one of us would be happy to sit down and talk about this with you. But it is pretty good on your own too. So it's a pretty simple thing that you can use in your own situation. And just really quickly, as a closing here, I'm not going to walk through this one, but there is a state of Oregon personal tax withholding calculator as well that's very similar. Obviously, the tax code is a little bit different, so you're going to have different questions, but some of it's very similar, and you're going to need the exact same documents, so you might as well go through and do this too to get a full picture of what your tax liability is. But yes, I'm going to wrap this up here. Thank you very much for your time. And a couple of reminders. Oh, I do want to share one more thing here, like places you can go for help specifically. After the case studies, we have contact info for 2 sources of help here. First of all, I said this aloud, but here it is on the screen. If you're interested in working with a coach, you can contact our program manager, Lauren Fontana Rosa, at laurenf at mfs.email. If you have tax-related questions or to actually have your taxes prepared online, you can call our friends at MFS Cash Oregon on their tax hotline, which is open on Mondays and Tuesdays from 9 to 4 through October 13th. And the phone number there is 503-966-7942. Very, very helpful. I've called with some clients recently and gotten a great help from the volunteers there. So it's a really good resource. And when it comes time next year for you to actually file your taxes, the volunteers at MFS Cash Oregon will be able to help as well with that for free, help you file your taxes. So you can get professional level tax assistance when the time comes. And if you're checking in, you'll have an idea of what to expect at that time. So that's it for the video. Thank you very much for your time, and have a wonderful autumn. Bye-bye.